Good morning, everybody. Hey, welcome to Thursday. It is Jobs Day, and we get a revision of the GDP. Hey, we'll talk about that and more when Dave joins us here in just a few seconds.
105.7 Light FM. We're at 8:41 here. It's 19 before 9. Time to check in. Find out what's happening to your money this morning on Wall Street. It's kind of roller coaster going on. Let's check in with Phillip Statler from Statler Financial Services. Some big numbers out this morning. Some of them disappointing, some of them encouraging. We'll find out what goes on. Phillip, good morning. How are you today?
Hey, good morning, Dave. Hey, before we really get into it, I want a little drum roll, please, because we are now trading with the 10-year at like 3.97 and the 30-year at 3.96.
Well, poop. That gives us a 100% inversion. Everything is yielding higher than the 30-year bonds.
It is. Now, obviously, that number keeps bouncing between even and back and forth as trading happens, but we're close enough now that we could very well see it continue to spread the wrong direction.
Absolutely, and that tends to indicate expectations for the length of the future that we're looking at. When the 30-year bonds go down to the point where the short-term ones pay more, that's not what you want to see. It's always considered a harbinger of an impending recession. So I'm not happy to hear that news, but we've been kind of watching it eking its way into that direction now for the last 4 days, haven't we?
Yeah, we really have. And I mean, we got the 12-month government note now at 5.05% yield.
Holy crud. That's probably the best investment out there, given what's happening to equities, right?
On the 12 months, yeah, that is. It's really short term.
Really?
That's crazy.
Absolutely. Set the table for the morning before we get to the morning numbers. It was a kind of mixed bag yesterday, but I wouldn't call it a really good mixture. Dow was off by 84 points. That was about 0.25%. Standard & Poor's was about 0.16% off, down about 6.5%. And NASDAQ went up by not very darn much, by just under 15. I looked at things. I couldn't find anything specific out of the Federal Reserve minute reports that came out yesterday, but I did look at the flow as far as the equities were concerned. It was obviously investors were not particularly happy with what they read, were they?
No, they weren't. And basically it came out saying that, even though they approved a 0.25 point increase, that there was much saber rattling about 0.5% or more from many of the Fed governors. And so that becomes really the topic. And I think that's probably what they're focusing on, because that means this next meeting, we may see more saber rattling and that we may expect more than that 0.25%, because I think the market's looking at 0.25% again. But based on the numbers you and I are seeing, I just don't see how that can happen. I think that that group's going to win out. We'll see 0.25%. And if it really doesn't look good any better in March, I'm not saying we couldn't see another 0.75%.
I hope not 0.75%, but I'm kind of reading the dive that we've taken this week on the blue chips, especially, as being we're starting to build in the 0.5% number in March. I'd guess in that level anyway, wouldn't you?
Definitely. We're seeing that becoming more the expectation, at least from the traders. May not be their expectation, but from us out here looking in, it seems to me like that's the expectation, that more of the Fed presidents want to get to hey, let's get to that max number quicker, and then we can decide if it's working or not and decide if we need to let up.
Good. You're talking ivory tower. I got two things that kind of impact on that this morning. The one big number that came out of the federal government this morning is the look at the fourth quarter, the second estimate of the gross domestic product. It was 2.9% the last time they read it. They revised our growth down in the fourth quarter down to 2.7%. That's a little slower than the market expected. So I was kind of expecting that to mean good news for equities, but we're kind of seeing the syndrome during earnings season. They actually want good news to be good news. So we kind of took a knee downward on the market after that number came out, didn't we?
We did. I mean, the futures got cut basically in half, because we did have the Dow up over 100 or so, and then it's dropped down to below 50 right now. So not that it's gone red, but it did take some of the shine off of that number.
Evidently. The other numbers that came out kind of tell the same story. Consumer spending in the fourth quarter, the second look at that, 1.4%. One of your tip sheets had that basically what was expected, but it's kind of a mediocre growth rate as far as its impact on the economy is concerned.
Yeah, it is. I mean, but let's face it, but I think the Fed's going to like that number because they want to see, I mean, consumer spending fall off, because that means that they're having to pull back from spending, which means that we're steady, but people are having to spend too much still on inflated items.
Absolutely. So that might be a good harbinger from the Fed. The other number that came out this morning is decidedly not what the Federal Reserve is looking at, but good news for those of us that actually work for a living. First-time unemployment claims. I mean, they're trying so hard to get the unemployment rate up a little bit, and we just can't seem to do it. Only 192,000 first-time unemployment claims. That's even less than last week. And it's, good Lord, it's about 27,000 less than my tip sheets expected it. I'm glad we're not putting people out of work, but for all the work the Federal Reserve is doing trying to put a few of us out of work, they haven't succeeded yet, have they?
No, they really haven't, Dave. So it's one of those things. But I will tell you that we are seeing some people now lose their jobs in other things than technology. Wells Fargo came out this morning and basically said, or I guess it was late yesterday afternoon, that they laid off several hundred mortgage bankers yesterday. So that becomes they announced it on Tuesday. So that's a big group, not a huge number, but still that's a couple hundred folks that just lost their jobs. And I know there's other banks that are laying off and repositioning and restructuring their staffs right now.
I got to assume the mortgage banking industry is going to be due for a shedding, given the number of mortgage applications that are being made. There just ain't as much business out there for a mortgage banker these days.
No, there's really not. I mean, in this article I was reading about Wells Fargo, their mortgages are down 40 or 70%.
And that kind of reflects what we're seeing on the National Mortgage Bankers Association figures we get every week too. I mean, we're seeing 75-80% decreases in terms of applications going in the door, and it's got to impact at the very least that sector of the banking industry before long, I'd suspect.
Well, that's true. Definitely is. That's going to continue to fall, I believe.
Absolutely. Earnings season continues. In addition to the macro information we got today, Dollar General at least had some preliminary information as to what they were going to look like on their quarterly report. What does the news look like on that side?
Not so good, Dave. Their preliminary results came out for the fourth quarter and for the fiscal year. So they came out for both. It was lower than their prior guidance, which is never good, and weaker than the consensus expectation was as well. From FactSet. So they are not having a real good day today, down almost 3% this morning.
Yowzers. And that flies in the face of logic, but it's almost following a pattern that the high-end stores, the elective retail, is doing quite well. But we got Walmart with a less than positive outlook on their report earlier this week, and now another discount store not doing well. Kind of flies in the face of logic, but it's starting to develop a pattern, isn't it?
It definitely seems that way. The folks that hit that shopping is more the lower economic folks, and so they're having a harder time just putting food on the table.
Yep, and it's the first fallout for a recession. Generally, the lower economic strata end up getting hit harder by a recession, which is what my biggest concern is, of the Fed raising things too fast and flushing us down too big a hole too fast.
Exactly, and that we know that they just don't realize what they're doing, and so that's they should have been listening to you and I 2 years ago, right?
So tell us how you feel, Phillip. Go ahead. Anything else you got out there?
Hey, we do have some other things coming out there, and some good, some bad. But Lucid Motors, they're another one of the electric vehicle makers, and they reported their fourth quarter revenue, and it fell short of expectations. They built just 7,000 of its luxury sedans. And so they had a lot of share challenges. They got downgraded. And so they're down 13% this morning, Dave.
Ooh. I've been kind of having the instinct for a long time that I think we're getting the cart a little before the horse on EVs.
I think so. I mean, there's not enough infrastructure out for those things to really and truly take off. But we've got some other ones. How eBay reported, and their fourth quarter earnings and revenue top forecast, and I think they beat by 2 cents a share, which was pretty good. And so but they're not trading up today. They're trading down on forward-looking items. They were expected to hit a certain level, and they've come out and said, well, we're not going to hit that number. We're going to be less than that. So they're trading down almost 6% this morning.
The pattern continues. Guidance rules all this quarter. Yeah, without a doubt.
It does. We got a couple good ones, though. We got NVIDIA reported. They're the chip giant because of their chip that they developed to help with AI. That's been a big help for them. And so they beat on top and bottom line, as well as gave some good news for this next quarter. So they're up 12.2% this morning.
Wow.
Yeah.
One or two more. Yeah.
All right. So then we got Etsy reported. You know, Etsy, they're place where people can post their stuff and sell it. But they had an okay quarter as well. They had $807 million of revenue compared to 752 that was expected. So good for them. They're up 3.7%. And let's see, where should we stop at? Well, let's stop with Bath and Body, Bath and Body, their retail chain issued weaker than expected first quarter and full year guidance. And so they're not doing too well today. They're actually down 7.25% this morning.
Woo! Delayed quote only has them down 4, so they're diving fast.
Yeah, they are.
We're looking. Oh yeah. Yesterday, net, call it a flat day. Not a big amount of movement on any of the futures, but it was mixed between the blue chips and the growth stocks. 45 minutes before we open this morning, what are we looking at so far, Philip?
Hey, we still have some green ink, Dave. It's not falling off the wagon yet. So we got the Dow up right now about $59. That's not quite 0.2%. S&P 500 is up almost 0.5% at $18, and NASDAQ 100 is getting close to being up 1%, up $112. So things are looking okay on that front if we can just keep it going this morning. Silver, we've got trading down 0.75%, gold down 0.6. Crude oil is heading back up, though I think it's below where it was yesterday, Dave. It's up 1.25% at $74.84 a barrel.
Yeah, it was over 75 yesterday, so it's down from yesterday morning at this time. The overseas markets on the Asian Rim, everything was off, mostly fractionally at 6 when the Asian Rim markets shut down. Europe is mixed at the moment. British markets are off by a little bit. French and German markets are up by a little bit halfway through their day. Risk counts for a lot, and it varies how much you need depending upon how old you are. Take some fine-tuning from a pro. How do I get my retirement plan back online, Philip?
Exactly, Dave. And that's why I created the core retirement design to help people design that retirement to make sure they don't have too much risk. And then that risk they do have matches up with what they can handle. Give us a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And cheering for some good news and another day to dump out of the federal government here tomorrow morning with you on Light. Philip, thank you much. I will catch you tomorrow morning, all right?
All right, man. Have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Hope you have a great day. As we get ready to, we got one more day left. We'll see what happens today and talk about it again tomorrow. Until then, have a great day.